I think given enough time, we will all probably end up in similar places. Banks will be like fintechs. Fintechs will be like banks. Fintechs will be like each other. Because as you're seeking growth, you can grow deeper, you can grow wider, and your wider might be offering more products, which makes you start doing what every other person is doing. Your wider can also become going to more geographies. I think eventually everybody will be like, we'll be like ourselves. But talking about banks, I think banks fundamentally, I was listening to Babs, and he's right about it. The problem is the way they think. Unless you change banking leadership to become like a tech-first organization that is run with products, science decision-making, and engineering at the forefront, I think they will always be classic bankers. And so the way I look at it is that as long as the leadership of both different factions, banks and fintechs remain the same, fintechs that are going product and engineering and customer and data-driven decision-making will possibly move ahead. There is one elephant in the room. It's the license. I think fintechs are a little bit afraid to get banking licenses until you get to a certain level, mostly because of the way classic banks are valued on a net book basis. And a lot of us are valued on revenue multiples, and you are afraid of valuation compression or that. But if you want to kind of really, really be honest with yourself, eventually down the line, if you want to continue growing and handle as much customers as possible with the trust level that you expect them to have for you, I think you need to get a banking license, which will make you become one. And if you take a look at Neobank, I think Neobank now has a banking license.
Always had one.
Sorry?
They always had one.
They always had one.
Here's it.
Exactly. I hear Revolut is really pushing hard to get a banking license.
Yeah, one.
So eventually fintech will now be about how you think, not just the license now.
Yeah.
How do you run the business? And is your finance being really truly powered by technology and products? And then eventually I proceed. It's not like I proceed. I already do a bit of what Fairmoney classically does. Kuda is doing a bit of what Moniepoint is doing, a bit of what Fairmoney is doing. We just have our different strongholds, which I think we'll all hold on to and begin just to develop other aspects of the business. As a startup, you are starting up, you have minimal resources, and these resources needs to be devoted such that anything you focus on needs to reach its escape velocity. So it's a bandwidth question, and this is the fundamental reason why you need to focus. But usually what now happens is that when you mature a product, the bandwidth required to continue running that product reduces because it's matured, it's now an adult. It can take care of itself. You've gotten burnt, you've done everything, then you can focus on the next things to do. But the way to look at it, however, is a bandwidth, right? Because if you look at organizations like Amazon, Microsoft, Google, they launch products, shitload of products. Some fail, some succeed. They have large organizations, plenty of verticals. So this is not a question of why organizations cannot actually succeed at having multiple verticals. It's a question of bandwidth. And this bandwidth is about, one, your execution maturity in terms of processes, systems, two, investments you can make in terms of, capital into the product itself, as well as every other factors of execution or production that you need. So in essence, as a startup, where you're still battling with maturity of your core product and you have limited resources, to get escape velocity, you should focus on a few products. As you begin to grow and you have more resources and you've matured and you know how to do things, business as usual, then you can actually work on more products. Now, these more products can now be more products, different geographies, different products in different geographies. So I think that's the way to look at it. Because bandwidth is a complication, is a complexity solving thing. Execution is about fixing complexities. So because you now have multiple regulations in different jurisdictions, adds more layers of complexity. But assuming you've done it before, business as usual, you know the FCA, you know what they are looking for. You can do it again and again and again. It's not a big deal to you. Then you can easily expand. So the real limitation that you have is bandwidth. And different organizations have different bandwidth. There are organizations that just manage to get to where they are. There are organizations that are really, really matured. If an Amazon said that they are coming to do my business in Nigeria and they devoted their bandwidth in Nigeria, I will be afraid. Nigeria is complex, that's the point. Between regulation, markets, people, the resources required to execute it. But do you have the resources in terms of people, knowledge, processes, systems to be able to execute it? That's what's required. So if I want to expand to Kenya now, I am a little bit afraid. Like, Kenya is a matured market with the same level of complexities, regulation, capable competition, the bandwidth requirement to really succeed at that. Even if I took away all my things from Nigeria and focused on just Kenya, would I still have succeeded? So I think ultimately that's just the way to look at it. So that's the framework that can connect small startups expansion to big startups expansion. It's just a bandwidth.